What's up, guys? Spektrades is back with another video. And in this video, I'll be going over why a lot of traders lose in trading and how in 2023 you can master trading and I wouldn't say you're not going to lose, but you will gain an edge that will prevent you from taking the trades that you know will make you lose, that you know will eventually lead to a loss. And in this video, we'll be going over liquidity and understanding what liquidity is and how liquidity works and how liquidity tricks you into believing that it's a correct zone or something, and then tricks you and takes your money, hits your stop loss, and goes to the right direction. But there are, like in my last video, I think I have stated in one of the videos, I have stated there are some types of liquidity. To first understand liquidity, you have to understand what are the types of liquidity. And one of the types of liquidity is internal range and external range. External range liquidity. External range, and for external range, it could be old highs or a old low, equal highs or equal lows, or there's other terms, there's other sideway pattern, what's it called? Basically, it's plenty types of liquidity, but in this video we'll be going over the main ones and how to not get tricked by them, which is internal range and external range. And internal range is an external range liquidity. All right, as you guys can see, if you guys can already notice, these dots right here that I placed, all these right here are just places that liquidity dwell at, in places where people place their stop losses at. That basically liquidity is what drives the market, and for the market to come to this downside, there has to be liquidity below for the market to come purge this and then keep going up. Because a lot of people, right, since market came, they thinking this is a strong low, right? So market came and gave them a break of structure. This is on the weekly time frames. This is just hindsight, guys. This is not any back testing or anything. I'm just explaining. So a lot of people thinking this is a break of structure, right? So, and they thinking that this is a strong low and that the low will hold, which it did, but not for long. Probably found a lower time, because this is a weekly, probably found a lower time frame structure and then came here. But this move right here, this low didn't last for long, because this low is a weak low. To understand liquidity, you have to understand first weak lows and strong highs, and strong lows and weak highs, right? So this low right here is a point of liquidity because it is a weak low. This high right here was the origin of it, right? It first came down here. Let me do this. It first came from up here and did a slight pullback, but it never went back up to break this. So this is still the range. This is still the beginning of the range. So this is still the strong high. And then it came back up and here and came back up and did this. But this is a weak low. So this is a strong high right here. This is a weak low. This low will never hold for a long-term buy that will eventually come and clear these highs, right? So once you understand that, so the first concept, you have to understand the concepts of weak highs, strong highs, I meant. A strong high and a weak low, right? Because weak lows and weak highs are our let me see, weak lows and weak highs are our external range liquidities. Those are the those are the type of liquidities we target as, I would say, take profits. So if you are looking for a take profit, you would always target a weak high or a weak low, because heavy liquidity will be under or above them, right? So since this is a weak low, since we can deduce that price came here and did a slight pullback, but didn't come back up here, right? A slight pullback and came down here, right? And was making slight movements. Even though we came and gave us a break of structure right here, this is still a weak low, because this low failed to break this high. So now if this low had came and broke through this high, then this low wouldn't have been purged like this. You see it? Price just came down and cleared it and went right up, because all this right here was liquidity. All this was weak lows. And so that's the first thing to understand weak lows and weak highs. Like this is a weak high right here, right? This is a weak high. It first started here, and then I lost it. Okay, first started here and this low, and then went and made that higher high, and then went and made that higher high, right? From that high, this high right here is a weak high because it failed to break through the previous low, right? All they did was come back and mitigate it. And then since it is a weak high, people was trying to sell right here. You see it? Those wicks right here that went back down, those are buyers. No, those are sellers trying to sell because they don't understand liquidity, right? But since we understand liquidity, we know that this is a strong low and this is a weak high, and this high will not hold, and it's just liquidity. So what we can do is just probably get a re-entry and use this as our take profits, right? I have a similar trade that this is one of the trades that I had taken a long time ago, but it truly shows you the spectra of liquidity, right? Let me see. Right? Because let me see. This high right here, I'm trying to annotate, guys. I'm sorry. Okay. This high, see, erase. This high failed to create a lower low. I don't know why this keep happening, guys. I'm sorry. No, keep creating a lower low. Then, all right, because this high failed to create a lower low, right, and was just used as a reversal point, like from here to here, and reverse back up, this high will not hold. It's just a TP point. It's an external liquidity range. Like right here, some people thought it would probably sell right here at this order block, and this is liquidity, right? And they did get a sell, but that sell was just to mitigate this unfilled imbalance. But that sell was just to mitigate this unfilled imbalance to come clear that weak high right here, because this high failed to create a new low. All right, now we're back on the charts. I hope that type of example explained it very well. I would say the strong high and the strong low series. In my other video, I had also go over the strong high and the strong low series. So if you guys want me to do a personal video on strong highs and strong lows, let me guys know and I'll do it for you guys. And so that's the first liquidity, external range and old highs or old lows. Like this is an old low, and this right here is an old high. So these right here, you can expect these to be broken. For a further recap and just more simply explaining internal and external range liquidities, external range liquidities is an old high, and external range liquidities are old highs or old lows, or weak highs and weak lows. Like right here is a weak low, and we can deduce that this is a weak high, right? And this is a weak high because all two of these highs what they failed to do, they failed to create a higher high. They failed to come in clear this high. If this high had came and passed through this high right here like this and then went down, now this would be a strong high. But this is not a strong high right here. This is a strong high. And now this has become a weak low. And since we know this is a weak low, we can't be in here looking for buys, I would say, right? So if we deduce that this is a weak low, we can't be here looking for buys like some people were right here. The order block will give you a move, but it won't be the long-term move that will hold. And even though I'm on the weekly, and the weekly is more powerful and it will hold on the weekly, we're more intraday traders, right? So on the lower time frames, these moves will not hold at all. If this was a 15-minute move, it'll probably wicked it in and then came back, gave the retest, and purged through it. Even though this low created this high failed to give us a higher high, right? To come break through these previous highs and come all the way up here to the strong high. So we know that this low won't hold. So this is a point of internal range liquidity, right? Because it's happening inside of the range. Let me do this for you guys. Delete. Okay. Because it's happening inside of the range, like as you guys can see, right? Say if we pretending that this is the range, right? Anything inside is liquidity. I would say anything inside is liquidity. Or even right here, if this is the range, right? We have bullish market structure right here in a bullish order flow. Everything inside, it will give you a small pullback, but to just come and clear it all. All these small points inside that you see marked up, all of them are just points of liquidity. They will only give you a slight pullback, right? To come mitigate another order to just come sell off and clear off. Because these lows are weak. Any internal range liquidity, they are weak. They will not hold, and do not trust them. Do not trust them, because they will not hold. Also, equal highs, equal highs and equal lows. Equal highs can be like this, right? Like for the retail traders, they come right here. Equal highs, they come here, and they sell off, right? And they have a 30 pip stop loss. That's how I remember trading, right? Have a 30 pip stop loss, which is all like above the highs, and just sell and just wait. But what you will expense, right? A lot of those traders, they make money. They make a lot of money, but they are in heavy drawdown. I'm talking about heavy drawdown, because market come here and clear these weak highs and give them in heavy drawdown, and then come back and then come back and sells. Exactly what happens right here, right? This is a form of sort of equal lows, but it took liquidity from this low, right? But this low was already mitigated by this low, and this is also a weak low. So this low wasn't not gonna hold, right? But a lot of guys, but it's kind of the same pattern. A lot of people, right? It's like a W pattern right here. Come back, retest. Okay, cool. You come here. All right. And this is liquidity. I come and take my position here. That kind of happened here. You see it? That's what kind of happened. This low was used as liquidity, and price came, filled under it. But since this is a weak low, we know that this low will not hold. And guess what price did? Purge right through it. Purge right through it, because heavy stop losses was here. Because a lot of guys placed their stop loss down here because they thought market was going to come to clear this old high, right? But little did they know that this is a strong high, and market just came, tap right into it, filled this imbalance, all right? Filled this imbalance, and came and took them out and purged them. And look, and some people I don't think you can hold this right here, especially on the weekly, because this is like a 1,000 pip stop loss, right? But still, some people, right, from these lows probably put a 30 pip stop loss, thinking that this low will hold, but it just came in, just purged them all, purged them through, right? But that's really the main key details on liquidity. In sideways patterns, it's just, I would say a correction. That's what I was meant to say. That's what it was, a correction. Like if you see market moving sideways to your POI, like 1, 2, 3, 4, 5, 6, 7, 8, 9, boom, right? So say your POI is like right here. I would say right here. Say this is your POI, right? Look how market is correcting up. Look how market is correcting. Let me remove this for you guys. But market comes on the lower time frames. This is a beautiful correction. I would say a beautiful correction, because like if market came in boom like this, I wouldn't really be really expecting this trading. Market just boom, like wow, like it's like NFP day. Yeah, this how I would probably get cleared for sure. But market did a corrective move on. It's like market was crawling up there, if that makes sense. On the lower time frames, probably the 1 hour, it's like market was crawling up there. It wasn't in a rush, it was just crawling up there. Came back down, retested that high, and then sell hard, right? Because this is another form of liquidity. You want to know why? Because this low, I don't know if you guys can remember, this low is a weak low. This low failed to break through this strong high. Now, if this low came in purge through this high, right? If this low came in purge, let me see. This low came in purge through this high, then this would have been a strong high, right? And we would probably look for buys right here, right? Some people were buying right here, right? But we didn't look for buy right here because we know that this is a weak low, and this low will get broken into, and which is dead. It just got crashed into, crashed hard, right? Now we're here now. Now all of these to me are forms of internal range liquidities. Like we have this right here. This right here. All of these highs will get broken. And we have this right here. This OB that was supposed to hold, right, but got broken into, which probably will be used as resistance later on. And all of these right here, to me, are forms of liquidity. All of these right here are forms of liquidity, all right? But that's really the video today. I hope you guys understood the concepts and just seeing a better viewpoint on liquidity and how to understand liquidity, because liquidity is what drives the market. And if you don't understand liquidity, you will in turn be liquidity. I'm gonna bring some more charts for you guys, so I can explain the concepts even better. So right here is another point of, right here is another setup that perfectly explains liquidity. Right now, this right here was internal range liquidity being built, right, like as a trap. But this also is a weak low, because this low, I can't really show past data, failed to create a higher high, right? So it failed to create a higher high, right? So this low was in turn a weak low, because this low came from a strong high, and that strong high smacked this high down. So we know, even though this low might give us a small retest, that's why it's a risk entry, it might give us a small retest. That's only for a small pullback to come clear that weak low, because we know weak lows and weak highs and internal range liquidities and old lows and old highs are forms of liquidity. Let me do another video for another marker for you guys. Okay, this is another one also. trade. As we can see, internal range liquidity is being built, right? Small high, like these are just correcting moves, to be honest. They are not here for nothing. They're just here to trick you, because on the lower time frames, these look like huge moves. That's why you look at the higher time frame structure first before you go on the lower time frames. Because if you don't understand the higher time frame structure, lower time frame liquidity will kill you and just eat you alive. Like this right here, all of these are just building liquidity, forms of liquidity. And look how market just comes, purged through it all, right? Cleared these guys that thought this was gonna hold. They thought this was gonna sell, right? It broke structure, so they think this side is gonna sell. They came back, try to retest, kill them again, boom. So they're like, okay, this one has to hold this time. So boom, some people were probably looking for sales right here, right above, right here in this OB. Some people were probably looking for sales in this OB, right? Liquidity above it, right? But all of this whole range right here is just internal range liquidity being built. All of it is to trick you. It's like a consolidation zone. All of it is to trick you, to make you believing that these are the correct moves. When market would just come, purge you out, take you out, and clear it all. More videos. Make sure you guys like, subscribe, and comment for more videos. Stay tuned with Spektrades. We out.